we came up immediately with scenarios. And you know, it's interesting. The trade outside the US, which we call TOTUS, T-O-T-U-S, it's actually still 89% of world trade. And so the playbook that we had was, we'll have to plan for every kind of scenario, from the worst to the best and the stuff in between. And then we have to help our clients to navigate. First order impact would be countries that are affected, obviously China predominantly, to the US. Industries that would be affected, which would be consumer discretionary, electronics, semiconductor, etc. And then figure out, you know, what the playbook would be for the first order impact. The second order impact, however, which was the bigger unknown, was number one, the increase in volatility, tremendous volatility in interest rates and exchange rates. Number two, the crash in consumer confidence. Number three, the huge volatility in markets. Global markets went down a lot. If you remember, it went back up. But there was this huge volatility that we had to help our clients navigate. CEOs don't like uncertainty. We had a great, when I talked to all my colleagues in other banks, everyone had a great first quarter. But second and third quarter, everyone said, you know, our clients are pressing the pause button because nobody knows. I haven't heard so many CEOs say these three words. I don't know, as I have since April 2nd. Having said that, though, I do believe that in Asia anyway, a lot of Asian clients and Asian companies realize, look, there is a lot of trade to be had outside the US. Intra-regional trade in Asia is growing. You have a population of nearly 5 billion, a population that is educated, hardworking, and very AI-focused, and very much focused on the future. So if we invest correctly and we look at, you know, other supply chains, you have to help your clients to diversify their risks. And with volatility, you can actually grab a really good rate or a really good exchange rate to help. And look at new supply chains and look at also new technology, tech stacks, etc. So it will be a bifurcated world, and we're just going to have to live with it.
I chair United Bank for Africa. And UBA serves 45 million customers across the globe. We operate in 24 countries, on 4 continents, and we process transactions in billions on a daily basis. UBA is helping to transform lives on the continent because payments and access to finance are so critical for the development of Africa. But we're just starting. There's still so much to be done. And from where I sit as the chairman of this bank, I believe that banking infrastructure is as critical, as important, as in the transformation, the renaissance of Africa, as power, roads, ports. And the key thing is what we all need to do to have the banking sector, the finance sector, drives Africa's prosperity, drives Africa's transformation in the 21st century, given where we're at and the challenges that we see. So for me, there are 4 critical pillars we need to tackle. One is to make Africa a safe haven for savings. Mobilizing domestic savings is very critical for transformation of economies. 2 is to enable private global capital find its way into Africa, to help power investments that we need to drive the continent's economic transformation. The third is capacitizing and improving our ability on the continent to transact and swiftly effect payments. Africa is a continent of about 1.3 billion people, and yet we don't have very strong, robust payment engine, which is where institutions like United Bank for Africa is coming forward to provide opportunity and solution for that gap. And lastly is what I call Africapitalism, which is enabling the private sector to drive, orchestrate, and lead the growth and transformation of the continent. I believe that these are things we need to do to take Africa to the next steps.
How do you think about African banks, though, in the context of what is developing a lot of new trade relationships outside of the continent? Where do African banks fit into that playbook?
For Africa today, African institutions, what we do at United Bank for Africa is because we see that there's a gap, payments, trade. And so African institutions are building capacity, but we need to also partner with the rest of the world to have robust payment capacity to help transactions as well as facilitate trade between Africa and the rest of the world. For instance, United Bank for Africa, we operate in the Gulf, and we like to follow Gulf businesses into Africa. We understand our ways around Africa. We want to handhold companies that are coming to Africa to invest. We also facilitate payment with the rest of the world. So we believe that in the 21st century, African financial institutions should be strong on trade facilitation, should help payments transactions for the continent and with the rest of the world, and most importantly, be catalytic in the transformation of the continent.
What do banks do, right? Banks take deposits and they lend it to businesses or individuals. And that role will be disintermediated by fintechs that can do unbanking, do something, one vertical really well. So for us to continue to be relevant, you have to be digital, you have to have your data in a data lake, and you have to have your AI models, and in time to come, which is now, be able to adopt the new generative AI technologies. So in order to continue to be relevant in deposit gathering, you have to do payments. That's both domestic payments and international payments. So today, most of Asia and most emerging markets now have real-time payment rails, which means actually your country-to-country payments can be atomic and instant. Today, with blockchain, you can also have cross-border payments to be atomic and instant. Gone are the days where you have T+1, T+2. It still is, unfortunately, in most countries. But I believe that technology today can help us to leapfrog and have real-time payments in small amounts. So with technology, with the global payment system, I do think that, especially after Liberation Day, many countries are thinking, well, in the past, a lot of trade happened in US dollars. And perhaps if people are worried about having too much concentration in US dollars, then they might be thinking, I might need to have alternative currencies. And that's where I think, increasingly now you're seeing a lot more trade happen between, let's say, the GCC and Asia in other currencies, including the euro, including CNH, etc. And I believe that diversification of currencies will continue to happen. Well, in adversity comes opportunity.
Correct.
And when you have volatility like this, and honestly, I haven't seen vols this high, and I've been in banking a long time, if it's in your favor, grab it. So, for example, when interest rates fell right after Liberation Day, that was our clients' chance to lock in an IRS, right? Get your interest rate swap in and lock in a cheap, lower rate. And most of them did. For other companies where they have currency swings as well, again, using the FX volatility to lock in a rate. So we've came out with a product where you can actually lock a rate forward in your digital account. Just lock it, what you call it FX secure. So with technology today, you can come up with all kinds of interesting solutions. And high vols means obviously higher risks, but also more opportunities.
Is your expectation, though, for this to continue to be a benefit for the bank?
Well, a lot of investment banks announced very good results in Q1 because volatility has been good. And I won't be surprised if April, a lot of trading rooms in banking made quite a lot of money. If you went the right way, of course. But most banks are long volatility. Most traders are long volatility today. And if you're long vol, I think you should do well. Is it an opportunity? It's both an opportunity for hedging, but also an opportunity to get your clients on board to make sure that they have the right diversity of currencies.
For those who don't know, Naira is the Nigerian local currency. And currency volatility is a challenge for Africa and for Asia. This global south, fixing the volatility of our currencies will be very critical for ultimately developing our economies. So it's a challenge. And everyone thinking about a solution to that. Hoping we can find one soon. But talking about Nigeria, let's break it down a bit, As an investor, because beyond being a bank chairman, I wear other hats. I invest in the oil sector, the power sector, and hospitality and the real estate sector. What's important to people to a large extent is predictability, stability. Let me know, even if the rate is, whatever the rate is, but let there be predictability. Let me enter the boardroom. Let's plan. Let's build scenarios. Let's be sure of what it will be. So in Nigeria, we've had currency situation, but in recent times, there's been interesting, encouraging stability. So we can plan, and that is very, very, very welcome. It's a good development, and I'd like to see that continue. And for me, as I think of not just Africa, but Africa, Asia, that is very critical for every economy. Stability and ability to predict your currency is very critical. Now, you talked about gains. Yes, some people, there's gains when you have a volatility. There's losses also. But what's important is taking advantage of the opportunity or the challenge. If you find a solution around the challenge, it becomes an opportunity. If you see an opportunity and you take advantage of the opportunity to further strengthen your balance sheet, if you're a financial institution, even for non-financial institutions, strengthen your balance sheet and position because of that currency fluctuation and volatility, which will definitely come again, either in near term, mid-term, or long term. So currency is a challenge, but almost a constant for planning in Africa as it is in Asia. And ability to predict is very critical. And that is what I see in Naira today. I see Naira is becoming quite stable. And I have friends who live in the other OECD countries, want to do transactions with Africa, Nigeria in particular, and they are happy that there's stability and predictability of the currency. And we want to see it stable and, if anything, go down progressively.
I think the supply chain bifurcation, the sort of China for China and the rest of the world and or the US for US, I think it's supply chain bifurcation that is an issue. In the past, if you made in China, you moved to ASEAN and then you moved to Mexico or Eastern Europe, Poland, Hungary, etc. And today, the uncertainty of how much tariffs are going to cost wherever you are in the world is a big issue. And business people don't like uncertainty. So some of the deal flows that they were thinking about, they've pressed the pause button until there's more clarity around how much tariffs are from each country.
Are you seeing that globally?
Yes, but as I said, I think most people are also thinking, well, I might sell to the US, but I also can sell outside the US. I can sell in Europe, I can sell within ASEAN, I can sell intra-regional trade, EMEA, etc. So the opportunity here is to look for new supply chains and look for new markets. That's one. The other opportunity is really the use of generative AI to reduce costs and increase productivity. And that, I think, in Asia, the leapfrog, the ambition to do so is tremendous. It's both an opportunity and also a challenge, because if you don't, you'll be left behind. And so a lot of our clients are looking at what's happening in Industry 4.0, right? How can an AI and Gen AI help industry to make manufacturing a lot more effective, a lot more efficient, a lot more productive? You have humanoid robots also creating, now in an aging demographic in Asia, robots and humanoid robots, smart humanoid robots could really be a game changer. You've got now AI-enabled biotech. That would be a very interesting, again, life-enhancing new technologies. Deep Sea, we all know, the generative AI and deep tech, quantum computing, drones, flying drones, etc. So I think there are many new technologies. We all just have to get our heads around it. China's taken the leapfrog and said we're going to focus on these new growth areas. So I think what's happened is what Trump has done is created a desire to be more self-sufficient, a desire to be more resilient, and a desire to diversify. And this could, in the long term, lead to structural changes in structural investments that could help some of these Asian economies leapfrog. I think that's exciting.
Africa is an interesting continent. We have over 600 million people, 700 million people of the 1.1 billion Africans are under the age of 25. So employment, job creation is very critical for us on the continent. Also, in Africa, from the customers we serve, access to capital is so critical. And the headache or the challenge is how do we create an ecosystem, how do we support the small and medium-scale enterprise on the continent so that collectively we all can help transform Africa by creating jobs for our young people. And AI has been wonderful. United Bank for Africa, we introduced AI chatbot, first chatbot in banking system on the continent in 2017. And we are even moving further to generative AI. But what is critical for us is, if I prioritize the things that are important to us, I think that supporting small and medium-scale enterprises is very, very, very important for the continent. AI will assist that, but more importantly, I think they need access to capital and the infrastructure that they need to succeed. Electricity is such an issue. I listened to the conversation this morning here when the energy minister was talking about scaling up, even America scaling up to 100 gigabytes of electricity. For AI to do well on the continent, we need to even improve further the electricity availability on the continent. So for me, first as an investor and also as a chairman of a bank and an Africa capital and somebody who thinks a lot about how to transform Africa, especially into a first century from within, ability to improve access to electricity on the continent is so critical to the development of Africa. Ability to improve payment infrastructure and system on the continent is so critical for the development of the continent. Ultimately, we need to create jobs for our young people on the continent. There's not time for any job losses, but we need to do a lot more so that we can increase the ability of the system to create jobs that our young ones need.